Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, the moral of today's video is this is why you always have a stop loss. We are going to be breaking down two of our trades that we recently took, and thank goodness we had a stop loss in place because the stock that we're going to be talking about got absolutely obliterated, selling off about 9%, but we were actually still able to cover profits on it, which is awesome. So guys, I hope you guys all enjoyed this, and if you guys do, hit that like button, subscribe, and don't forget, if you guys want to learn more about swing trading and trading in the markets, guys, check out our school where we talk about everything when it comes to swing trading, how to find stocks, our strategies, our approach. It's a one-stop shop for all of your swing trading needs. Check it out down below, and you guys can use code SCHOOL for 50% off. You guys absolutely love that code, so we're going to be establishing Friday at midnight is going to be the last day for the 50% off code. So code SCHOOL, 50% off. Check it out down below. And guys, let's dive into this. So this past trade here that we took on this stock here, we were able to still cover profits, which is really good. So you guys can see from our little handy dandy trading journal here, we only pretty much documented on this because I'm still working with our trading journal to be able to do all this, but I went in and I added MCK. This was the stock here that we recently traded. You guys know our entry price was near and around 545. Our exit price was all the way up at about 555, so it was about $10 per share, and we had a little over 20 shares, so it was a profit of $200. Now this P&L is only 1.8%, which, you know, I know a lot of you guys, especially with a small account with $100 or $200, may look at this 1% and go, man, I am never going to be a swing trader. That I'm never going to do that, right? But what makes a successful swing trader successful, it's about these 1% returns compounded, you know, 1, 2, 3% returns that just compound over the years. That's what makes up a successful trader. I've been doing this for over 6 years, and I can tell you what, I would rather hit base hits than try to swing for the fence. So, you know, MCK still up, you know, over $206. And obviously the only thing that's separating me from making more money is my account size. So let's break down the strategy here. So this was the stock, ticker symbol MCK. So MCK here, one of the things here that we look for is trends. Trends are very, very, very important here. You guys can see this good upward trend, which is very, very important here. Now, you guys can also see that the stock loves using moving average lines. You guys can see these red and blue lines, which obviously act as support and resistance. And honestly, we had a nice trade. The stock was just following this channel going up. Now, the approach we had with this was actually very simple. It was undervalued on the RSI. You know, it found good hourly support, as you guys can see, where it hits it, gets good buying pressure. So we hopped in near and around this 545 area, which honestly, you know, we could have gotten filled at, you know, 530. So, you know, the thing about swing trading and especially trading is you'll never buy at the peak bottom and you'll never sell at the peak top. You know, at one point I was over about $700 in profit, and I was feeling good. I thought the stock was actually going to continue to rally up, but they announced some news and the stock sold off. And, you know, I'll tell you this, that this happens, right? As a swing trader where you're holding positions for days, I'll say this, it does happen probably about 3 to 6 times a year in my experience over the past 6 years, where you just get crushed, right? Where a stock sells off. But that's why before you ever place a trade, you know your plan, right? You have a plan if stuff goes south. So for me, I pretty much saw this stock after hours sell off from 570 to 560. So I knew something major was going on, and we tried to exit actually at about this 560 range right when the market opened. And we really didn't get a very good fill on it, which is fine. You know, that's not that big of a deal. And by the time we got our order filled, it was near around 550, 555. So, you know, we probably were up a little more. But by the time our orders went through, and you know, I just did a basic market order, and I'm happy I did because you guys can see that the stock sold off. So why did we get sell off here for this one? They just released bad news, which just does happen. And then why did we sell? Is because I saw this huge dip down after hours where it fell through two moving average lines. So it fell through the 90 and 200, and then it opened up under the 200. So I said, okay, let's just get out of this position and move on to other opportunities. So that's exactly why we got out of this. And I'm very happy we were able to actually at least make something off that. But another stock here was Costco. We actually sold Costco this morning, and I'm happy we did that. And I'll show you kind of why. So Costco, very similar thing. Found nice support here, you guys can see. It was also right on the 90-day moving average line where it hits it. We have good tendencies of getting good buying pressure there, as you guys can see in the past. So we took a trade, and our average cost was near and around 805. So we actually had an $80 per share profit, which is awesome. Making up for MCK handsomely. But I also held this for about a month. But it's just one of those trades where the stock market sold off. I just saw a good opportunity to go heavy in on a position, and that's exactly what we did. So why we sold was this, right? Heavy support here. There was a lot of good entry points that you could have entered on. You could have entered on the breakouts here with setting your stops below it. You could have entered possibly on a good or at pretty much averaged in on your position, which I didn't at 873 where it tapped that moving average line. But you guys can see the stock actually sold off here down below these moving average lines. So I saw it sell off down below the 200, and it pretty much got my attention right here. And I was hoping where we could get at least some buying pressure back up to at least the $900 mark, which unfortunately didn't happen. But one of the things here I did see is where the stock just started not looking good, where it started forming this nice little downward trend. So, trends, I always imagine trends like a river, right? It's a lot easier to go in, it's a lot easier to swim downstream in a river than upstream. So with the stock just kind of changing, possibly doing some consolidation, that's fine. I'll just hop out, make a couple $1,000s, and just move on to other opportunity. The thing about swing trading is, at least for me, when I'm in the profit, I did my job, right? As my job is to make money. So I made money off this. Let's move on to other opportunity. So one of the stocks here that I actually really, really like here, and it's just kind of a waiting game now, was ticker symbol TRM. TRM here, you guys can see it sold off down below these moving average lines. But looking at the daily here, it does look pretty decent here. We do have a couple of things. We have a good trend line going up, which is always really nice. We also have some good support here. We have the 200-day moving average line closing in at about $31, where we could see this nice move. And, one of the things here is I was looking in on getting on this position, back in here. But one of the reasons I pretty much didn't was the RSI. The RSI at the time was only at a 35, which I've traded stocks for a 35, when it's at a 35. But my good rule of thumb, if we actually go ahead and we look at my checklist here, my good rule of thumb is upward trend RSI under a 30. So, with it being a 35, I figured with the market volatility we've seen, that just stick to our strategy and just wait. It's always better to just be patient rather than jump in on trades. So that's exactly what we're doing. I made some good money pretty much all of September. And looking back here, what I want to talk about here as well is historically with the stock market, September is the worst month of the year. So we always got to take a step back, stick to our plan, stick to our strategies. And the great thing about trading is you can always short. So you can always bet for the market to go down. And that's what makes up a good trader, is being able to adapt, and alter your strategy. So guys, if you guys want to learn to trade and how to make money from the market, highly recommend checking out our school. Code SCHOOL, 50% off. It's going to be ending tomorrow. So check it out down below, guys. I'll see you guys in there. Hope you guys all enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.